This week, Tesla was not sold because the business collapsed. It was sold on earnings and then quietly bought back on narrative. And if last week's price action felt confusing, you're not alone. In this video, I'm going to connect the chart, the news, the earnings, and Elon's intent so you can clearly understand what actually moved Tesla stock and, more importantly, how long-term investors should read this moment. This is not a recap, this is interpretation. Hi, this is Ken. Despite earnings being released, last week turned into one of the most volatile and emotionally divided weeks for Tesla stock in a long time. Heavy selling followed by a sudden rebound. Fear on one day, optimism on the next, and a lot of investors asking the same question: what was really going on? So today, let's walk through the week step by step and separate noise from signal. Let's start with the foundation of the entire week, the chart on January 27th. On the surface, Tesla was clearly being sold. Price was moving lower, headlines were negative, sentiment was shaky, but when you look closer, something felt off. Volume wasn't exploding. RSI stayed in the neutral zone. Volume delta was negative, but price wasn't collapsing in one direction. This was not panic selling, and that distinction matters a lot because panic selling has a very specific fingerprint. You see emotional volume, you see forced liquidation, you see price breaking levels, and not looking back. None of that happened here. What we were watching instead was high-level position adjustment. Investors reducing exposure, reshuffling risk, but not abandoning the story. The market wasn't afraid, it was uncertain. And uncertainty is a very different emotion. When markets are uncertain, they wait, they compress, they hesitate. That January 27th chart was already telling us something important. Whatever was coming next, it wasn't going to be simple fear. Now, let's move to January 28th, when a cluster of Tesla news hit the market. FSD pricing and feature changes, auto steer being removed from standard, a rumor around new hardware for Model Y, which was later corrected, regulatory comments around FSD, and expansion updates for Cybertruck. Individually, none of these were catastrophic, but collectively, they were uncomfortable. Investors didn't know how to feel, and that confusion was the point where many people stopped thinking structurally, because if you line these updates up side by side, there is one common thread. Every single change revolved around FSD. Tesla wasn't tweaking products randomly. It wasn't reacting defensively. It was reorganizing its entire product and user experience around autonomy. This is a subtle but critical shift. Tesla is no longer asking, how do we sell more cars? It's asking, how do we get more people to use FSD? Once you see that, those scattered news headlines stop looking random. They start forming a line. And with that context in mind, we arrive at January 29th, earnings day. This is where the market reacts most emotionally because numbers feel objective. Revenue was down year over year. Profit declined. From a traditional EV manufacturer lens, that disappointment made sense. And yes, the stock sold off immediately after earnings. But here's the key. Even after earnings, selling never turned into fear. And that's where the story really begins. So let's talk about why fear never took over after earnings. Because alongside the headline numbers, Tesla quietly revealed something far more important. FSD subscriptions reached 1.1 million users. Energy margins climbed to 30%. And starting in 2026, FSD will fully transition to a monthly subscription model. This is not about how many cars Tesla sells anymore. It's about how Tesla generates profit, and that distinction changes everything. When profit shifts from one-time hardware sales to recurring software and energy revenue, valuation frameworks start to break. That's why the stock sold on earnings, but didn't collapse. The market wasn't rejecting Tesla, it was repricing uncertainty, and that uncertainty was confirmed the very next day. On January 30th, during the earnings call, we finally heard the intent behind the numbers. Production of Model S and Model X coming to an end, factories being repurposed for Optimus, Robotaxi already operating in real-world conditions, over $20 billion in planned investment toward 2026, and perhaps most telling, Elon explicitly pointing to chips as the biggest constraint. This wasn't a conversation about efficiency. This was a conversation about identity. Tesla isn't optimizing a car business. It's constructing an autonomy and robotics platform. And once you see that, the final piece of the week falls into place. January 31st, global media reaction. And this is where everything split. From an EV manufacturer lens, the narrative was negative. Slowing growth, margin pressure, heavy investment risk. But from an AI, robotics, and autonomy lens, this wasn't an ending. It was a transition point. Short-term numbers versus long-term structure. That split in interpretation was reflected perfectly in the stock. Sold after earnings, then rebounding on rumors surrounding SpaceX integration. And here's the important part. Whether those rumors are true or not is almost irrelevant. What the market reacted to was the possibility of Elon's ecosystem, Tesla, SpaceX, and AI being valued as a single vision. That's why the stock stabilized around the low 400s. Not euphoric, not fearful, undecided. The market hasn't chosen which Tesla it's valuing yet. So how should long-term investors think about this? Instead of asking whether Tesla goes up or down next week, ask a deeper question. Are you valuing Tesla as an EV manufacturer, as an AI and robotics platform, or as part of a broader technological ecosystem? Because the answer to that question completely changes how you interpret the same earnings report. Tesla is no longer a company everyone can agree on. And that's exactly why the stock feels unstable. Opinions are polarized and price action looks irrational. But instability doesn't always signal weakness. Sometimes it signals transition. Last week can be summarized very simply. Tesla was sold on earnings and bought on story. And as long as the story remains unresolved, volatility will remain part of the journey. For long-term investors, this isn't a moment to chase emotion. It's a moment to decide perspective, because the future Tesla depends less on last quarter's numbers and more on which identity ultimately wins. That's all for today. Thank you for watching, and I appreciate you being here. If you found this analysis helpful, feel free to support the channel. And as always, enjoy the future we're building, one step at a time.